Hey, everybody, it's Joni Bates. It is Wednesday at 7 o'clock. And what do we do every Wednesday at 7 o'clock? It is Whiskey Wednesday. And I have my good friends with me today, my team. I have Brett Ray and Mark Tossler here. And of course, our lender extraordinaire is Paul with Anchor. And I'm a little under the weather today. My voice keeps going out. So I will be doing less talking tonight. And my team will be doing most of that. And I will be facilitating again with housekeeping. Please just go into the chat, into the comments. I can see you. I can see what you're saying, and I will make sure the gentlemen get your questions. So, Paul, thank you. Thank you so much for being here.
Thank you for having me. I'm excited to be here.
Awesome. We're going to kick off, Paul. If you can explain to us how is a mortgage broker different than a lender, and how does that fit into your world?
Yeah, for sure. And I do, as you guys know, I like to explain things through relation. I think we talk about a mortgage lender like a retail lender. It's like going into a Walmart. And Walmart, you have some options, you have things that work for you, and just about anything you need for a home or whatever aspect of life Walmart's going to have. Well, when you work for a mortgage broker, it's like you're walking into a Sam's. So we have those same options, but we also have even more options and a little more, and we can work in more detail depending on the clients. One of the things I position myself and I tell clientele is what my job is to make your job easier when choosing a lender. We do the shopping for you. We figure out who has the best rates, who has the lowest closing costs, how fast can they do it, how good can they do it, and if they can get it done or not at all. And we're able to cycle through plenty of different lenders in order to get the job done. And you both have experienced many of times. We've added more lenders on just to meet specific clientele. And that's something that the typical retail lender is not going to do. They're going to, in short, it's like they try to get their clients to meet them at their threshold, where as a broker, we're meeting your clients at their threshold. And that's like the major key difference between the two.
Yeah, excellent. Thank you. That is a really good explanation. I think the thing that points to me for our clients is they're in control. They're not having to settle for what's already on the rack, what's already on the shelf. You're able to, if you will, go in the back room and find it, source it, get what we need. I know that we've been talking about HELOCs for our investors. That's relatively new for folks. And we brought that to you, and you guys were really quick to jump on, excuse me, providing that. We have another question here that is running across the bottom. Brett?
So, yeah, Paul, basically what we hear this a lot when we explain this to people about the FHA or first-time homebuyer program, about it's just for those people who buy their first home. And then there is that misconception around that is just for that first-time home buyer buying their very first home.
Yeah. One of the misconceptions is within the first 4 words, first-time home buyer. People think you have to if you buy one home, you're a first-time home buyer. Well, that's not the case. There's actually a 3-year time limit. So if you buy a home, sell that home, and then do not own a home for 3 years and get back in the market, you're a first-time home buyer. And the reason for that is because because somebody bought a home in 1985 and lived with their children or somewhere, and they bought another home today, oh my gosh, it is going to be like buying a first-time home, because so much changes in this real estate space and in this mortgage world, where if you take 3 years from going through the process, it's going to be like learning it all over again. People say it's hard to forget how to ride a bike until you haven't rode one in 20 years and you try to ride it again.
So you get those exact same benefits as, like, so me, say I rented for 3 years, I would get the exact same benefits as that 20-year-old going in buying their very first home.
100%. 100%. I've seen people buy a home, sell it, go live in housing given to them by employment through renting for an employment contract of 3 years, 3 to 5 years typically, and then get back out and then go do an FHA loan to qualify for it again because they are technically a first time home buyer once again.
That's good. Thank you. Thank you for that, Paul. All right. So next question I had basically was, we hear a lot of people talk about the upfront cost with going out and getting the home. And the biggest one we hear all the time is that down payment up front to go after that mortgage. We have those conversations that there are those programs that exist out there. There are some ugly ones that are still in and about the real estate sphere, but can you kind of expand on if you have any programs that you guys provide that would help out some of our first-time home buyers or somebody that's actually looking to make a move?
This is my favorite subject. This is why the broker space is so special. And this is what gets me so excited because, yes, we have options. And I'll go a step further and say we have all the options. I love going over closing costs and down payment assistance because this is where you start to see how good your loan officer is and how good that lender is. We have 1% down with no mortgage insurance, conventional. We have down payment assistance, conventional. We have Purchase Plus, which allows you to get a home and then literally the lender will give you $5,000 just in help for closing costs, just to qualify for the home. We have down payment assistance programs that are based on a certain census tract that, again, will wipe your down payment and give you credit. We have forgivable loans. We have the whole plethora. We have loans at down payment assistance that the assistance is forgivable at closing. We have down payment assistance where the forgivable is forgiven at 2 to 3 years. We have a utility of options to make sure people can get in homes. When I said we meet people where they're at, we really do meet people where they're at.
Yeah, I really like that. And I do hear this a lot along with that. And I want to circle back with I hear people talk about security deposits. And then, if I move right now, I'm going to have to pay my security deposit, things of that nature. And I like to harp on Joni when I can, but she did teach me a little trick that we can always roll that into the closing cost. The seller pay that, and then you're free and clear out the door and into your new home. So I do enjoy those little tricks that we learn along the way.
Mm-hmm.
Yeah, you're absolutely right, Brett. When you get those objections when we're talking to our clients, the biggest thing as a consumer to understand, particularly working with JB and Co., is that we have Paul. We have professionals that you just need to have a conversation with. It's not pressure and high sales. It's relationship based. And you know what? If you're not ready to buy, sell, invest, make a move, that's completely fine. But we want you to leave our conversations with knowledge. And if you gain that knowledge, then we win. You know, it's not about always getting to the finish line with the closing table. If our clients learn something and they're able to make more informed decisions for themselves, their family, their parents, then that's a huge, huge win. And that's what I love. What Paul was just saying is basically, you don't know what you don't know. And as agents and consumers, we don't know what we don't know. That's why we need to rely on really smart people like Paul. And Paul, we got a question that came in from Tammy. Does the first-time home buyer definition apply to other types of loans? Great question, Tammy.
Yes, fantastic question. And to answer, yes, it applies to all types of loans. That no one loan program can say you're not a first-time home buyer because legally after 3 years you are a first-time home buyer. So nobody can jab step around it or do anything. So you do qualify for same type of loans all over because you have not owned a home simply because you have not owned a home for 3 years. And that is the definition.
I keep muting myself because I keep coughing and then I start talking. Sorry, guys. Paul, thank you. That was amazing. So this is for the consumer, because when we do Whiskey Wednesday, we have a lot of agents that want to come and learn, and we also want to make sure that from the consumer side that they're getting information. So from the consumer side, anyone who has purchased in the last year, let's talk about that. Is it time to refinance, Paul?
Absolutely. And if you're not ready to refinance, then you should be getting things together to be prepared to refinance in the very near future. What you see on the news is real. Rates getting better, that is real. Rates being almost 2 points lower than where they were is very real. So if you are especially like an FHA buyer, because FHA's working on some very special things, like an FHA streamline that's going to make it extremely quick, extremely efficient, extremely easy to refinance. You're going to start also see lenders begin to pop up offering incentives to refinance with them. This is again where it's good to be a broker because if you see a Rocket Mortgage offer an incentive to refinance with them, guess who has that incentive? Me. So like and we have other incentives to compare to make sure you get the best option possible. So yes, it is a great time to refinance. It's a great time to cash in on that equity. It's a great time to lower your monthly payments because you're going to see significant decreases. And we're just in the beginning. The year just started, and don't forget, we ended 2023 with the Fed promising 3 more cuts. So the going is going to get good for anybody looking to enter the refinance.
And well, let me ask you this, and it's kind of a rhetorical question, but what would you foresee do you think there'd be a run on the market if our rates do drop significantly? You say in the next 4 to 6 months.
Mm-hmm. Yeah, if we see rates continue to drop and we see the Fed becoming a little bit more active in assisting the rates dropping, we're going to see the market. I don't want to ever say 2020 levels, but what compared to what we went through last year, it's going to feel like 2020 levels because we're going to see people get very, very, very busy. We're going to see people wanting to put offers on home. For some, like me and Joni talked earlier, for some agents, the market was always competitive. We were still having to force fast contingency dates in certain areas of the market. So just remember, when the markets get even hotter, those markets that never really took a step back is only going to keep ramping forward. And if they're demanding speed last year, this year they're probably going to demand a little bit more over closing. I mean, over asking and stuff like that. So we're going to see the market become extremely competitive. We're going to see a lot more buyers in the market. We're going to see a lot more refinances in the market. And here's the thing about these refinances is one thing I learned last year through working with Joni and Brett is investors are still out playing. They were still out playing. And you know what? They want to refinance too. And guess what? For a lot of them, it's not going to be a simple refinance. A lot of them are going to say, no, if I'm refinancing, I might as well put some equity out at the same time and continue to add on to my portfolio. So all the players are back on. As it gets hotter and as it gets better, we're going to see all the players back on. And we're going to see new investors enter the market from people who, again, bought last year thinking, okay, I secured the house. I'm going to refinance anyway. Why not pull some equity out, lower my monthly payment, and then buy another home and just pay what I was paying last year? So we're going to see a huge shift into the market is going to be very exciting. It's going to be very, very hot. I foresee.
I totally agree. I think it's a very interesting conversation to have in regards to what was happening fourth quarter 2023. We have some what I call holdover listings that have been on the market for a minute. And as agents, that's painful. It's painful for yourself. It's painful for your clients. But the statistics that I'm big on numbers. Numbers tell a story, and I love a good story. Fourth quarter of 2023 was incomparable to 1995. It was that slow. It's the slowest a quarter has been since 1995. So if agents out there, if you're feeling it, if you're like, I don't know what's happening, I feel like I'm at a standstill, you're not alone. So is the rest of the nation. And for consumers, if you have a house on the market, it's not doing what you hoped it would do, you're feeling frustrated, so is everybody else. So what I guess my message is, hang in there. The sun is going to come out. Spring is coming. And I know that Mark and Brett and I and Paul have conversations regularly because of the election year. And I know that I've talked about this a few different times, but it's true. Spring market is early. If you're an agent and you're not ready, if you don't have your bug out bag for being an agent in your car to, at the moment's notice, go show a house, you need to get it ready, because spring market has sprung and the market will pretty much dry up by September 1st because of the election. People are going to be getting blasted by all the tomfoolery of an election, and they are not going to have any interest in buying or selling because they're basically going to be hijacked into all that craziness. So understand that as a consumer, the time is now. And as an agent, you best be ready, because we are, and we've never stopped doing business. So if you're not ready, it's okay. We'll do it. We'll take on those clients. Don't worry about them. I want to put Mark on the spot for a second. Mark, first of all, congratulations on being on our team. I'm super excited introducing you officially here. And you have a listing coming up. I want you to talk about your listing. And also, if you have any specific questions for Paul.
So yeah, the listing is a over 55 condo that is in Woodstock. It's off of Highway 92, 575 east to Highway 92 to Hames Road. It's a very nice over 55 condo that is in the Willows neighborhood. It's listed for $420. It'll go live tomorrow. So a little preview for everyone. You'll see it tomorrow live. Open house will be this Saturday and Sunday from 2 p.m. to 5 p.m.
Gorgeous home, exceptionally staged by Becca with RF Interiors. We had incredible photography done by, I'm going to say James. Am I saying it right?
James Morrow photography. But yeah, Jim Morrow photography. We'll put the link. I'm sure we could get that.
Yeah,
up
we can
in
share
the,
that
in
link.
The chat here.
Incredible,
but, beautiful photography.
Good job on that, Mark. Like, wow. Came into this business and you're killing it. Do you have any specific questions for Paul in regards to, from your perspective in real estate and anything in lending?
And maybe a question for the team as a whole here. So if we could talk about, and we hear the term often, and we see it come up in some of our listings, opportunity zones. If we could talk about, what is an opportunity zone, where are opportunity zones, and what some of the benefits are associated with purchases in those areas.
That is a fantastic question. And I got to tell you, I love me an opportunity zone, because in real estate, and I think that a lot of agents don't see this, but because we like to discover and we like to dig in a lot and we love going down a rabbit hole, there are little Easter eggs throughout government programs. They're just everywhere. And an opportunity zone is an example of one of those amazing Easter eggs. I'll give a broad stroke about my knowledge on opportunity zones. And then Paul, you can jump into the kind of programs that are available for those opportunity zones. Basically, it's a map. You can literally go into HUD, Housing and Urban Development, into their website. Everyone can do it. And there's a tab and it's purple and it says Opportunity Zone. And it will bring up a map within zip codes. Whatever shaded purple is eligible for government programs that don't normally exist. We're talking about 1% on a conventional with extra grants, extra down payment programs. It just layers on the good because these areas have been designated as areas that the government is trying to rise up for economy. So how'd I do, Paul?
Did good. I'm still.
I think you did great. Yeah.
I called Brett yesterday and we talked about it because I'm still learning about the opportunity zone. So this is where I like to sit down and I like to be a student because you're teaching the master class here. Brett told me we had about an hour conversation yesterday and I was like mind blown. And we're going to meet with some people on Friday to learn even more about it from the lending perspective. So
yeah.
And my biggest thing is if you don't want to pay back, you better go look for an opportunity zone because you are going to get some of the craziest tax incentives most people never see. And they're actually, a lot of them are right in your backyard and most people don't even know it. So
Literally. I mean, you talk about Smyrna. Yeah, we were talking about Smyrna's property over there, Fair Oaks area across from the Air Force Base.
Yep.
Hot property, 2 miles from the battery. That is an opportunity zone. And like Brett was saying, it's not just consumer go in, buy a house, get a great deal. It's investor. I have a 1031 exchange. I need that money to go somewhere. You put it into an opportunity zone and you no longer have any capital gains based on that, even in your futures. So it starts to get a little woo-woo, and trust me, it's all legal. It sounds like it shouldn't be, but the government is just providing an opportunity zone. And if you're listening and you're an investor and you know what a 1031 exchange is and you got some money sitting someplace and you need to put it someplace, give us a call.
Yeah, Johnny says it gets a little woo-woo, but this is what we do, and we're here to help you along that path. So, yeah, like Johnny said, give us a call. Happy to help you.
I'm so excited for this year, guys. This right here, I'm taking a snapshot right now. It is January 24th, and I'm putting this. We are going to serve so many people. We're going to change lives. Yes, at the end, we are going to get to the closing table and take care of our families, but our goal is all service-based. JB & Co. is kindness, trust, and expertise. And right here is the dream team. So I'm humbled and thank you. Say something, guys.
I was muted.
I was trying to hold back tears. I was trying to hold my emotions back.
I'm trying to hold my dog back.
I love it. I love it.
How can you tell we're live? We've got dogs and we've got babies in the
dogs
background.
And babies.
So,
we keep it real. We keep it real. Thank you again. We are available. We are 24/7. We have an agent on call every weekend. Paul is always there for us. We work together extremely well. So if you need anything, please give us a call at 678-788-6465. And of course, Paul, I have your phone number in here. Let me pull that back up if I can. No, it's in private chats. It's 770-547-6215. That's Paul Bain with Anchor Mortgage at 770-547-6215. And you all be blessed. Thank you guys for jumping on.
Thank you all. Good night.
Good night.